CNBC recently came out with an article that talks about the 6 ways to mitigate the rising home and auto insurance prices. And we're going to go over those and debunk a few things and give some adjustments that I would recommend as far as articles like this. Great company, great information. Just a few tweaks that I would make. Now, the stats I don't necessarily agree with, which is I actually think they're worse than what CNBC has said. They said the average homeowners is about 20% higher from the previous year, and they're expecting about 4 to 6% on top of it in 2024 going into 2025. Now, that's all fine and dandy, but I think it's a little bit more than that. Depending on the state that you're in, if it's California, it's less because they're more restrictive. If it's Michigan, where the homes are averaging 60 years or more now, they're going up even more. So you're seeing double rate increases, which is 7 here, 10 here, and eventually you're going to see them kind of creep up to that 30+% from 2 years prior. Now, I don't love that, but the auto is doing the same thing where they have risen about 20 some odd percent as well, and they're going up a little bit more. I think it's slowing down as far as the increase because a lot of companies aren't necessarily losing money, although they have been the last few years. It's starting to pivot to where it's enough to where the insurance companies are breaking even or making a good income again. The average cost for car insurance is over $2,500 per year. So if you're paying about $240, we'll just say $200 to $250 per month, you may be paying more than you should for insurance. Their answer to this, I'll give you the kind of the summary, is to shop around with an independent agent. And although I do agree with that, I think we should look at some factors before you do that and find out if it's worth it. By the way, if you are shopping for home or auto insurance, I'll put a link in the description below where you can work with an independent agent in your state. The thing is, the independent agents are great, but I always recommend that you go to the one that you trust the most. If you already work with an independent agent and you like what they've done in the past, they've treated you well, they answer the phone, they'll help you with a claim, whatever the case is, if they're there to help assist you and give you the advice, then that's a good agency to work with. I always recommend, instead of shopping for another policy, although that's fine and dandy, and yes, there is a good chance you'll find a better rate, is work with the agent to find out if something's changed. I just got a letter in the mail for a customer that a person has been added to their policy. It came to us because their address isn't correct, so now we've got to figure that out, fix it. We're going to work on their behalf to get those errors corrected, and then that additional driver, if they're not in the home, we can get it removed so their increase isn't going to be that increase, and they'll know that they were taken care of. Those are just some of the few things that you can see with a policy, whether it changes and what things happen. Like I said, if you are shopping, I'll put a link in the description below. There are a few states where non-independent agents, where your State Farm or your Allstate, although they also have independents now, where they can shop multiple companies. But Farmers and your one-off companies like Cure or Geico technically is actually testing out working with independent agents. Our agency actually started working with them a few months back. So there's a lot of these companies, even Farmers, who used to be only direct, you can only quote a Farmers, they're still that way, but they also offer a secondary product. Allstate, same thing. They started working with independent agents. Nationwide, so honestly, most of the time you're going to lean towards independent, but there are a few cases in some states. We'll take New Jersey, for example. State Farm has always been competitive there, at least in my experience. Or if you take another state, Allstate, although now independent agents have access to that, Allstate has been competitive there, even though their rates have climbed up quite a bit. So I don't know if that's necessarily true anymore, but in those cases, those one-off or those individual scenarios, there are chances that your other large companies or your smaller companies can be a fit. In the study, they said about 37% of shoppers have started to shop around with independent agents, and about 27% of them plan to switch. That's a pretty large number, because if you look at past videos I've made, this number is pretty significant because it was only about 15% that used to shop. Now, because rates 20-30% larger does make an impact, it is time to look around to see what options are available. It's not about getting different coverage, although that's the thing you got to be careful with. It's about finding the right fit. Each company has a set of guidelines, a set of customers. They're looking for specific clients because all of their products are priced for specific people. And when you're no longer a fit, that price tends to get crazy. And not always the case, because right now the prices have just been going up in general. So if you are seeing a little bit of an increase, that's probably not that you're a bad fit. It's just the way that the market has shifted. If you are not a good fit, you'll see the price double. You'll see it go up 200%. You'll see a $90 a month increase. All of the things that show that you're no longer that fit for that company is going to happen. That's where the right company or right agency can take that policy, take it around and say, here's all the profile, here's all the coverages we need, here's everything we have to have, and find out, does company A? Nope. Does company B? Nope. Does company C? Maybe. Does company D? Yes, this guy loves these guys. So their prices are perfectly aligned to give them the best deal. Also, we've got them the good coverage, and like most independent agencies, hopefully they are guidelines to this, but most independent agencies only try to work with A-rated companies. That means that they're stable. Their finances are in place so that if there is a claim, it's less likely that they're going to go insolvent or disappear and have to just say, sorry, we don't have any money left, goodbye. So in that case, that is the best route when you are shopping. Now that leads to the second piece, which is the coverage. And this article talks about adjusting your coverage or lowering your coverage, essentially raising your deductibles, making sure liability limits are correct. That's always good to do. That's why when you do shop, it is good to have an agent that can give you those advice pieces. We find more broken policies and missing coverages than anything. If you're just looking for a piece of paper that says I'm insured and you're legal when you get pulled over from the police, then that is a better route. Just choose the bare bones spot. It's going to give you the cheapest price possible. The other way is if you start shopping on the onlines and the .coms and the Insurifys and the Quote Wizards and the Shop My Things and all of those policies. Those are going to sell your information to multiple people. And if you're willing to do that, if you're willing to be like, okay, I'm willing to sit down, get 50 phone calls in the next 2 days, I'm going to get 10 text messages, and I'm just going to go through them all. It never ends, honestly, because a year later they're going to do it again, and it's just following up with you, constantly trying to technically sell your information back to agents. Don't get me wrong, they have good intentions. It's just annoying to me. If that's the case, then you can go through that gambit of information. You'll likely find a cheaper deal if that's what you're looking for. When it renews, a bunch of people are going to contact you again because you're in their system now, and they're going to try to follow up with you again. So then every year you do have that option where it slowly dies off. Some agents stop doing that, and most agencies that are reputable stop doing that. Again, if that's not for you, the link in the description below is where you work with an independent agent who shops multiple companies, and then they can give you ideas without having to go through that whole gambit of multiple agents that are just going to constantly call you. There is nothing wrong with changing the coverages that you have. So when you look at your policy and you're like, okay, here's my policy. If you know what you're looking at, I'll put a link at the end of the video, or I'll put a link to the next video that goes over coverages and what you should carry. And then you can get an idea of what you should be looking for. Do you need $500,000 worth of coverage? Well, if you don't have a large income and you don't have a lot of assets and you don't plan on having a ton, you're not going to win the lottery tomorrow, although that would be great too, then you're not going to have to worry about that part of it. If you have a good income, or if you plan on having a good income, then yeah, you may want that $300,000, $400,000, or $500,000 coverage to protect you in case something happens. A lot of people don't realize that when you get in an accident, it's not the coverage you have today, it's what the future can have. They can take income from you because you have to pay anything you're liable for in the event of a claim. In those cases, just knowing that you have the right coverage is probably the most satisfying thing, at least in the industry, is because it's like, okay, I don't have to think about whether I'm covered correctly. Now I just have to figure out if this price fits what I'm willing to pay for that coverage. The fourth thing that they talk about, which I completely agree with, is checking your discounts. There are tons of discounts people are missing all the time. Even at my agency, you can't always get every discount. You would hang up on us if we asked you every possible discount. Are you a credit union member? Are you part of a motorcycle club? Are you part of the Chrysler dealership? Are you an employee at an insurance company? There's hundreds of discounts, and most of the time, I'll give you the 5 most common. Credit union member, multi-policy, if you're doing home and auto together, that's a policy discount or a package discount. Larger ones is engineer, CPA, or a teacher, part of a teachers association. If you're any of those or an alumni, actually I'll give you a sixth one. Alumni is a common one. For younger drivers, there's different discounts if you have great grades, a B on average or better. If you're driving to college and you're more than 100 miles away from your home and your car's at home, so if you're on campus essentially, then there's a discount for that. So there's different discounts that you can apply for. It makes sense to talk to the agent and go over those just to find out which ones are a good fit for you. Number 5 is probably one of the most important pieces, but it's also the piece that gets people the most frustrated. It's keep your credit good. Technically, in most states, I'll answer the question now before you go in the comments and rage out that it's crazy, they should never do it, it's illegal. There's technically something called an insurance score. There's multiple things that make up that insurance score between claims, history, payments, and credit, and all of those pieces that can apply for that. And that score determines how risky it is to have you as a customer. Commonly, they never pay their bills, so what's the point? You don't write those things. Also, they have 5 claims, they have this, they have that. We've paid $50,000 out and they canceled us in 2 weeks. There's all of these things that make up an insurance score that the companies base a lot of it on. That being said, go ahead and rage out, but the majority of that is built off credit. Credit is a major piece of your insurance, and the better your credit gets, the better your policy can get. That you have to be careful with because you may or may not want to talk to your agent to have them rerun your insurance score. If you know that your credit got better, it makes sense to have them rerun it because you could get a better deal on the same policy when it renews. You have to wait till the renewal, but if you go a few weeks or a month in advance, they can rerun that insurance score and hopefully the policy price goes down. Keep in mind, they're gonna run motor vehicles, they're now gonna run CLUE, which is like claims and tickets. So if you've had a great, better credit, but then you've also had claims and tickets, you may want to wait and just let that sit. And number 6, I'm going to fix the way that this was worded, but it says check insurance prices or costs ahead of time. I think what they're trying to say is if you're going to move, check the price. If you're going to buy a new car, talk to the agent to see what the cost of the insurance is. If your daughter or son or whoever's going to start driving, check the price before you let them get their license. It's pretty significant. That cost can make or break whether you can pay the bill or not. And so if you do that, it may make sense to delay the license or to not buy the new Ferrari or the new Mustang or to not move to that location because it is a higher risk. Maybe the location 2 blocks down is cheaper. Hopefully you got it this far. Let me know in the comments below. Just put a number 1 in there if you made it this far. And if that's the case, be very careful on the type of coverage you purchase. There are so many insurance agents out there and so few of them are trained properly to actually care for the customer. Really good example is if you ever go to a dealership, most of the time, or a bank, most of the time, they're gonna put you in a system and they're gonna shoot out all these numbers. And it's just like the kayak of insurance, right? They're gonna take all of these companies and put them in order and shop the best price. And here's the bottom price that you can pay. And what they don't realize is even in those quoting softwares, if they put the same coverage in, some of those companies offer alternative quotes. And those alternative quotes are changing the coverages that they put in to try to make themselves more competitive. Most of those agents are the quick one-off agents who spend 2 minutes on the phone with you and then they give you a price and they try to sell you. Most of the time, they're doing something like that. They're trying to get you the cheapest price so that you're happy because you don't know differently and you bought what's essentially a piece of paper that barely covers you if you have a claim. How do you fight that? The next step is to check out our car insurance or our home insurance 101. I'll link the video for car here, link for video for home here, and I'll also link the credit or the insurance score one here. So if you need to learn more auto insurance, what coverages you should carry, home, what you should carry, or if you want to learn about that insurance score and how it impacts it, go ahead and click one of those videos there. I'm Mark with Think Insurance. I'll see you in the next one.